We all pay for homeowners insurance. We assume that if the absolute worst happens, we're covered. But what if that assumption is dangerously wrong? Today, we're going to dig in and find out if your policy is the safety net you think it is, or if it's got a massive hole you don't even know about. So let me just ask you this straight up. Is your biggest financial asset, your home, truly protected if something terrible were to happen tomorrow? It sounds like a simple question, right? But for millions of people, the answer is a hard no. And the worst part is, most of them have no idea. I want you to look at this number. After a major wildfire in Colorado, a jaw-dropping 74% of homeowners discovered they were underinsured. Think about that. That's nearly 3 out of every 4 families who, right in the middle of a nightmare, found out their financial safety net just wasn't there. And that hole in their safety net? On average, it was $139,000 deep. Just try to imagine that for a second. Having to come up with an extra $139 grand just to rebuild your life. This isn't some small gap, it's a financial catastrophe waiting to happen. And the thing is, it's not just bad luck. So, how does this even happen on such a massive scale? Well, it really comes down to one simple fact. The cost to rebuild a home is absolutely skyrocketing. It's being driven by a perfect storm of economic forces that most standard insurance policies just haven't kept up with. It really boils down to 4 main things. First, the price of basic materials. Lumber, wiring, all that stuff, it's way up. Second, there's a serious shortage of skilled construction workers, and that drives up labor costs. Third, think about it. When a big disaster hits an area, everyone needs materials and labor at the same time, which causes prices to surge. And finally, you've just got general inflation and tariffs layered on top of everything, making it even more expensive. To put a real number on it, the average cost to rebuild a home right now is hovering around $280 per square foot. For a pretty typical family home, that can easily push the total rebuild cost well over $400,000. And this rising cost, well, it shines a huge spotlight on the single biggest misunderstanding in all of home insurance. And here it is, the big one, the difference between your home's rebuild cost and its market value. These are 2 totally different numbers, and confusing them is exactly what gets so many well-meaning homeowners into serious financial trouble. So let's be crystal clear. Rebuild cost is the amount of money it would take in today's dollars to hire all the contractors and buy all the materials to put your home back exactly the way it was before it was destroyed. That's it. This is the number that matters for your insurance. So let's break this down side by side. Your rebuild cost is purely about construction, lumber, pipes, labor. Your market value, on the other hand, is what someone would pay for your house and the land it sits on. That land can be a huge chunk of your home's market value. But guess what? After a fire, you still own the land. You don't need insurance to cover something you already have. Your policy needs to cover the cost to rebuild the structure, not the price you get in a real estate sale. Okay, so that's the scary part. But the good news is, and this is really important, you are not helpless here. There are 4 very clear, very simple steps you can take right now to make sure you're actually protected. Let's just walk through them. All right, here are 4 things anyone can do. First, pull out your policy and find the dwelling coverage amount. Is that number based on what you paid for the house years ago, or is it based on today's $280 per square foot reality? Second, ask your agent about extended coverage. It's often a pretty affordable add-on that gives you a financial buffer, like a cushion, if costs go over your limit. Third, check if your policy has an inflation guard clause. This is a fantastic feature that automatically bumps up your coverage a little each year. And finally, hey, it never hurts to shop around. Compare what you have with other policies to see if you're missing something. As we start to wrap this up, just remember that all this information is only useful if you actually do something with it. And there's really one thought that should motivate you to do just that. Just let that sink in for a second. The worst time to discover you're underinsured is after a disaster happens, because at that point, it is simply too late. A 5-minute phone call or a quick email to your insurance agent today could literally prevent a devastating financial shock down the road. So I'm going to leave you with this one last question, and I want you to really think about it. When was the last time you actually looked at your homeowner's policy and made sure you are protected against today's costs and not yesterday's prices?